The differences between the Russell 2000 and the S&P 500 are significant, particularly in terms of performance. Although both indexes are highly popular, their performance records over the last decade have differed somewhat. The Russell 2000 has had consistent annual returns of around 11.2%, while the S&P 500 has estimated returns of approximately 14.6%. This disparity is largely due to the types of stocks each index focuses on. The S&P 500 comprises growth stocks, whereas the Russell 2000 consists of value stocks, which are not as favored by the equity market. As a result, the S&P 500 exhibits more favorable growth patterns. In terms of composition, the Russell 2000 encompasses over 2,000 small publicly traded companies across 11 industries, while the S&P 500 comprises around 500 of the largest U.S. companies, including several well-known brands. The S&P 500 has a more substantial market share in the tech industry and a larger market index. The selection method for companies to be added to the Russell 2000 roster is based primarily on market value, whereas the S&P 500 employs a more rigorous process, considering factors such as trading volume and float-based market capitalization. Despite their differences, both indexes share some similarities. They are both tracked by the same mutual funds and can be invested in through various means, including replicating their component shares, index futures, mutual funds, and ETFs. When comparing the two, the Russell 2000 is notable for its ease of tracking and decent growth performance rate, which has been stable and reliable over the years. However, the S&P 500 offers more promising returns and a diverse market index, with a selection process that inspires confidence and trust. Ultimately, the S&P 500 appears to be the more attractive option due to its robust selection method and higher returns. It is essential to note that the information presented is accurate as of the current time and is subject to change in the future.